All right, welcome back everyone. Today we're diving into a brand new explainer, and I am genuinely pumped for this one. We're going to decode the visual language of market shifts by looking right at the literal battleground where buyers and sellers clash. We're talking about candlestick charts, and specifically, we're going to learn how to spot the exact moments when a losing battle suddenly turns into a massive victory. Let's just jump right into it.
So, how do you know when a market has finally hit rock bottom? I mean, it's the ultimate trading question, isn't it? We all know that trying to catch a falling knife, buying into a market that is aggressively crashing, is incredibly dangerous. But what if you could actually see the footprints of the buyers sneaking back in? What if you had a visual clue that the market was shifting right before the massive rally actually happens? Well, that is exactly what we're going to uncover today.
To figure that out, we really need to understand our core concept for today, the bullish reversal. Simply put, this is a specific candlestick pattern that pops up at the very end of a downtrend. It indicates a massive shift in momentum from the sellers, the bears, to the buyers, the bulls. Think of this as a literal tug of war. The bears have been pulling the rope hard, dragging prices down, but suddenly, the panicked sellers get completely ambushed by a fresh wave of buyers.
Okay, here's our roadmap for today's explainer. We're going to cover the battle for market sentiment, single candle power moves, 2-candle counterattacks, 3-candle victories, and finally, reliability, context, and data.
All right, part 1, the battle for market sentiment, setting the stage for the bulls.
To really appreciate a reversal, you first have to understand the incredibly high stakes of a market where the bears have been in total, absolute control. It's absolutely crucial to distinguish a bullish reversal from a bullish continuation. A continuation pattern simply pauses an existing uptrend. It's basically a resting period. But a reversal, that means ending a painful, sustained downtrend. Reversals capture the absolute bottoms, perfectly framing the moment market psychology pivots from deep fear to fresh optimism.
Moving on to part 2, single candle power moves, the ambush.
Let's break down the play-by-play of our first combatants making a sudden desperate stand in just one single session. First up, the hammer. It's a famous one. It has a small body at the top and a very long lower wick, at least twice the size of the body. That long wick is crucial. It represents the exact moment intraday sellers pushed prices way down, but buyers violently rejected that drop and pushed it all the way back up by the close. Then there's the inverted hammer, which is essentially flipped. It has a small body near the bottom and a long upper wick. This means early buyers surged in to test higher prices. Even though they couldn't hold those highs, it's a massive warning shot to the bears that demand is finally waking up.
Now, the crucial point here is that 60% figure. According to extensive research by Thomas Bulkowski, both of these single-candle ambushes, the hammer and the inverted hammer, predict a successful upward reversal about 60% of the time when they're properly confirmed. Honestly, not bad for just one single session of price action, right?
All right, part 3, 2-candle counterattacks, shifting the momentum.
So what happens when the bulls actually coordinate their attack over 2 full trading sessions? We'll compare these 2 powerful counterattacks. First, we have the bullish engulfing. This one is super aggressive. A small bearish red candle is completely swallowed or engulfed by a massive green candle on the second day. It's just a decisive shift in control. Then we have the piercing line. Here, the market actually gaps down on the second day, looking like a total disaster for buyers. But then the bulls rally hard and recover above the halfway mark of yesterday's massive red drop. It's an incredible recovery that just leaves sellers completely stunned.
And this brilliantly illustrates the growing strength of the bulls as we add a bit more time to the pattern. Studies conducted by the University of Michigan in 2018 show that the bullish engulfing pattern boasts a 65% success rate in predicting future price increases. By watching the battle unfold over 2 days instead of one, we're actually seeing the buyers build a much stronger foundation for a sustained rally.
Which brings us to part 4, 3-candle victories, the decisive win.
Now we escalate to the ultimate triumphs, the moments where the bears are completely overwhelmed and routed. Let's walk chronologically through one of the most famous of these, the Morning Star. Step 1. We have a strong bearish candle. The downtrend looks incredibly healthy. But then, look at step 2. A small-bodied candle, often a doji, forms. This represents the exact moment the bears run out of steam. Momentum completely stalls into indecision. Then, boom, step 3. A strong bullish candle explodes upward, closing well into the body of the first day's drop. The bears are officially trapped and the bulls have taken total control.
And then, oh man, we have the absolute powerhouse, the 3 white soldiers.
The visual of this one is just striking. 3 consecutive large green candles, climbing up like a set of stairs. Each one closes progressively higher, and each opens within the body of the previous candle. This isn't just a sudden panicked short squeeze. No, this means sustained, orderly, and deeply aggressive buying pressure across 3 full sessions. When you see these climbing green steps, it very often signals heavy institutional buying stepping in to scoop up the market bottom.
Look at how this strategy builds. As we progress from a 1-candle skirmish like the hammer at a 60% success rate to a 2-candle campaign like the engulfing at 65%, all the way up to a massive 3-candle victory like the white soldiers, the probability of a successful reversal absolutely skyrockets to over 80%. It just proves that more evidence, gathered over more time, yields a vastly more reliable signal.
Okay, part 5. Reliability, context, and data. The reality check.
Now, as enthusiastic as I get about this stuff, we do need to bring things back down to earth for a second. Because look, simply seeing a shape on a chart is not some magical guarantee of instant wealth. But the data from Bukowski and other researchers proves that these patterns are quantifiable statistical edges, not just financial astrology. The 3 white soldiers sits at the top with an incredible 82 to 84% win rate, scaling down to the single candle hammer hovering at a respectable 60%. But notice that absolutely none of these are 100%. They are probabilities, plain and simple.
And to keep those probabilities actually in your favor, you need context. Context is literally the armor that protects these candlestick patterns from failing. First, you absolutely require a clear preceding downtrend because you can't have a reversal if there's nothing to reverse, right? Second, these patterns must align with major support zones on your chart. Third, you need confirmation from high trading volume. Low volume just means there's no real conviction behind the move. And finally, always wait for the next candle to confirm the reversal before jumping in head first.
This really brings us to a crucial summary. Reversal patterns are the result of underlying market dynamics. They reflect changes in supply and demand, but don't cause the reversals themselves. Never forget that candlestick charts are simply a visual footprint of human emotion and massive economic forces at play. They don't magically make the market move. They just show you exactly where the big money is deciding to make it stand. Which leaves us with one final thought. You now know what a single-day ambush looks like. You know exactly how a 2-day counterattack works, and you know the overwhelming power of a 3-candle victory. You've seen the hard data, so the only question left is, are you ready to find the hidden battles between bulls and bears on your own charts? The footprints are out there, just waiting for you to spot them. Thanks for joining me on this explainer, and happy hunting.